It gives me immense pleasure to welcome all of you to today's integrated business solution session organized by Board of Studies Academic. Students, IBS is one of the most unique papers at CA final level. Unlike traditional papers where we study and apply concepts subject wise, IBS requires us to think across subjects and look at a business problem from an integrated perspective. In this paper, you will need to connect concepts from financial reporting, auditing, taxation, financial management, strategic cost management, and your corporate and other laws area. The objective of IBS is not simply to test your technical knowledge, more importantly, it tests how effectively you can apply that knowledge to a real business situation. As future chartered accountants, you may be required to advise management, analyze business problems, evaluate various alternatives, identify risk, ensure compliances, and most importantly, help create value for organization and its stakeholders. That is exactly the kind of professional thinking that IBS is designed to develop. Therefore, while attempting an IBS case, always remember one important point: there is rarely a single subject solution. Now you have to think holistically. You need to look at case as a whole, identify the different issues, understand how they are connected, and then arrive at a practical and business oriented solution. Today's session has been designed with the same objective to help you understand this integrated approach and develop the confidence to handle multidisciplinary case studies. Today, we are going to discuss a case study which is based on tea industry. Although we are going to discuss three case studies in this session, but tea sector is very relevant for you. Why it is very relevant? This is an important sector for agriculture, employment, trade, and overall economy. The tea industry covers a wide range of activities from cultivation and harvesting of tea leaves to processing, blending, packaging, branding, and distribution. The industry has also changed significantly over the years. Consumer preferences are changing. Demand for premium and specialty teas is increasing, like masala tea. Okay, and health and wellness trends are influencing consumption. Okay, at the same time, digitalization, e-commerce, sustainability, and product innovation are changing the way tea companies operate and reach their consumers. However, the industry also faces several challenges. These include climatic and seasonal variations, fluctuation in tea prices, rising labor and input costs, supply chain issues, intense competition, and changing consumer preferences. Therefore, tea companies need to focus on areas such as vertical integration, product diversification, cost management, efficient use of resources, sustainability, branding, and supply chain management efficiency to to what to achieve long term growth. Let us take a simple example. It's my common example. This example I use very commonly in every session. Students, please try to connect. Okay. Consider a tea company operating in this highly competitive environment. If this company only grows and sells tea leaves, its ability to improve profitability be limited. Therefore, it may decide to move further along with its value chain and capture additional value. For example, the company may adopt backward integration by making its plantation operation more strong and securing a reliable supply of quality tea leaves. On the other hand, it may adopt forward integration, okay, by entering into processing, blending, packing, branding, and distribution. It means it may move in its supply chain backward or forward. Okay. Suppose the company decide to acquire tea processing and blending business. The decision may provide greater control over the value chain, but it also brings several questions. To acquire our supply, it is the best example of backward integration. But this backward integration is possible only when we have certain issues. These issues must be cleared before getting this decision. Okay, how should the acquisition be financed? Should the company be internal? Should the company use internal funds, debt, or equity? What will be financial implications? What are the regulatory and tax considerations? You have to think. You have to think before taking any strategic decision. You have to consider compliances portion also, in addition to finance area. Once the company has different division such as plantation, processing, blending, packaging, another important issues arise. And this important issue is transfer pricing. It is also relevant from the perspective of direct taxation as well as from the perspective of cost management area. What should be the appropriate transfer price between these divisions? How can a company ensure that each division is fairly evaluated while also ensuring goal congruence? You have goal congruence means you have to think in the interest of the company instead of personalized or divisionalized objective. You have to think from the perspective of companies. Similarly, when tea leaves are harvested, we need to consider the accounting treatment under Ind AS 41 and Ind AS 2. So you can see that one business decision can bring together several different areas of our CA final curriculum. And that is the essence of this paper. Today's case study covers several important concepts including horizontal integration, vertical integration, Manlow's matrix, value proposition, Porter's five forces, throughput accounting, transfer pricing, Ind AS 41, Ind AS 2, and SA 540 relating to accounting estimates. The important point is that these concepts should not be looked at in isolation. A strategic decision may have financial, accounting, taxation, regulatory, audit implications. Therefore, while solving an IBS case, we need to think like a business advisor. Students, please note that you have to think like a business advisor. rather than simply a student answering individual subject questions. I would also encourage you to focus on business logic behind the question. Do not just ask what provision or concept apply. Also ask yourself, why is this decision being taken? What is the impact on the business? What are the risks? What alternatives are available? And what would be the best solution from the management's perspective? Students, you have to create value for the management. Okay, this approach will help you to develop higher order thinking. Higher order skills required for this paper, and higher order skills are analysis, evaluation, and application. The case study has been already uploaded on Knowledge Portal. I encourage all of you to go through the case studies carefully so that you can get maximum benefit of this session. You are also welcome to ask a question during the session. We are privileged to have with us CA D. Ramprasad sir, partner assurance in ASA and Associates LLP, and sir is practice head at Bengaluru. Sir has extensive experience in auditing, risk management, and advisory services across various industries. His experience and practical insights will certainly help you to understand how these concepts are applied in real business situations. We sincerely thank Sir for joining us, particularly during this busy audit season, and for taking the time to share his knowledge and experience with the future members of the profession. With these words, let us begin today's session. I now invite CA Ramprasad sir to take us through these interesting case studies. Sir, over to you.
Thank you, Deepak ji. It is definitely a privilege, as always, to interact with the future members of the institute, the students of the CA final course. And the introduction that you made about IBS is very eloquent, very, very thorough, I must admit. And I must also admit that IBS was not a subject when we qualified as accountants way back, 3 decades back. But over the years, as you rightly said, integrated business studies, I would call it IBS, integrated business solutions, in the business parlance has become the order of the day. Today, to all the future members, to the CA final students, the expectation from a chartered accountant is today not merely accounting or controllership or some auditing. They are expecting us to provide complete solutions to all their business problems, and are looking at a fairly 360-degree view of any problem. I think that is a massive expectation. And that expectation has put us on par with the MBAs from IIMs. Earlier, that role was given to MBAs, and people thought chartered accountants are mere number crunchers. They may have no business perspective, but this has changed over the years. Today, CA is seen as a very trusted business advisor, and he is seen as a complete solutions man. I think that's a significant change which is happening in the profession. So without much, ado, thank you, Deepak, for the introduction. It is always a very humbling moment to go back to the drawing board, keep learning every day, which I always do for the last so many years, and also learn a lot of things along with the student community out here. And I would like to take you through the approach I'm going to have is, as Deepak ji rightly said, today's session, I wanted to focus on FMCG industry. As he rightly said, fast-moving consumer goods industry is one of the sunrise sectors in India. I remember auditing the first India superstore way back in 1996, exactly, to be very precise. Chennai, when it opened, the first food world shop was opened, the first supermarket came. It was a novel concept then. FMCG was a novel concept. From Kirana stores on the roadside to supermarket with AC and the complete stocking of materials on the gondolas to offers, etc., was new, and it was a massive success, I have to admit. People stood in queues to understand what it is to touch, feel, and buy. So that is the beginning of the FMCG sector in India, I must admit. And then, of course, it has over the last 3 decades, it has matured to be a sunrise sector for the country. It has matured with so many listed companies. It has matured to being one of the largest employment providers on the sales side. It has provided a complete supply chain solution from start to finish. You take any FM. So we will be touching today textiles. We'll also be touching today tea. Some background our Deepak ji has already given. I won't want to go in depth into it, but definitely I will go through the case study. The other one that I wanted to go through was on textile industry. So I also will give a small brief about this IBS paper, hardly 4 minutes, and then we'll plunge into the case study so that we have that benefit of complete discussion with us. Yeah. So good. I hope this. I think the screen is visible now. So
Yes, sir.
the screen is visible. Yeah. Yeah. So you yeah, one second. Shift F5. So this is for 100 marks. It's 4 hours open book. Everybody know there is a combination of MCQs and theory questions that we are going to put in. You have 5 case studies of 25 marks each. 4 should be attempted by each student. And what you will find is that it's a single open book. As he rightly said, it is there's no fixed syllabus. It draws from FR. It draws from advanced financial management, auditing, direct, indirect taxes, and strategic management. It is a subject which is going to test your judgment, your stimuli, and your reasoning attitude. I would urge all of you to think and apply logic rather than worry about the correctness of the answer. As long this is one paper which allows you to be true to yourself. So I think that is the beauty of this paper. So I think that's something that I love here. The flexibility and the freedom that it is giving you is phenomenal, actually. And the ability to read out a business scenario and pull out relevant facts. One hint I will give you is every para here is relevant. Every para is relevant. Every para has got some linkage to the question that is being asked, or it has a relevance to another para from where the question could be asked. So this is what it is. We talk of reporting, fraud, independence, and auditing, and GST implications, accounting, and India's judgment calls. The beauty of this paper is that it allows you to take some judgment calls. It allows you to think like a true chartered accountant and apply that judgment in the workplace. So treat it like open book facility. I think you are the best people. I would urge you to go with your own judgment, but don't try to do any new reading there. You please treat it as a lookup tool, confirm an exact section. Don't depend on it for learning a concept mid-exam. Don't do it. You'll be wasting time. Carrying unauthorized person notes. So please check what is the institute regulations in this, and then, exam technique plan, key figures. All the figures should be noted. Key dates should be noted. Then stakeholders, figure out. Whenever there's a stakeholder, there is always be linkage either to Companies Act or FEMA, or there could be subject tag. Please be careful about it. Try to grab all those hints which are there in the para. 10 minutes, take time to read the case study. That's how I think the best way, 10 to 12 minutes. Peacefully read it. It's worth spending time. Mark on the side of the answer paper, what are the subjects impacted? What are the topics which are getting impacted? And then probably you should really see from the questions how you link back to those topics. I think this is how I have been preparing these sessions, and I found it very, very useful, and throughput is far better. So And the last one is very important. Integrated conclusion is very important. Give one recommendation that reflects the combined impact across finance, etc., and general business reasoning often ties disparate figures together, even when the question is normally about tax or audit. I think that's something that the examiner would love to see how you are able to combine and draw linkages with various acts. So, as a professional, constantly in uh, on a daily basis, looking at things, particularly when you finalize the large engagements, large audits, the audit committee is very keen to look at an audit issue not only from an audit angle. They want to look at it from an India's angle. They want to look at it from a business angle. They want to look at it from how does it impact the company, how it impacts the competes, how does it value the company, how does it position the company, how it will be perceived in the marketplace. So there are hosts of things which are being looked at when you look at a particular decision. They may look at FEMA impact. They may look at, okay, what is the transfer pricing impact? So then they may look at, GST, whether it's going to, RCM is going to be affected, whether I will have inverted duty structure. Because of inverted duty structure, whether we'll have a huge, cash sitting with government. I'm handling one company. I can't name the company for privacy reasons. Very interesting. FMCG company. And, subsequent to our Honorable Prime Minister, bringing down the GST rates last September, if you know, he said there's a massive Diwali gift, and then he around September, around this time, I think September time, he announced rate cuts which were implemented from I think the Dasara time. Believe me, many companies have gone into inverted duty structure, and inverted duty structure is where you are having more input credit than how much you can utilize. And suddenly, as we were finalizing the audit, we were actually awestruck that there is a significant amount that had to be claimed from the government as a refund. And we gave it as a solid value add to the management. And of course, because of independence issues, we could not do it. We had to direct it to another accountant who could do it. But the idea is that you have to look at audit today, not as a mere audit or finalization, but also see how certain balances. This is just a review of my ledger balance. I did a review of the balance. As I was reviewing the balance, this was sitting tight in the books. And then, of course, the credit was duly linked to the the government ledger as well. And we found that both reconciled. There's no problem. Very legitimate exercise, very legitimate due from the government. So application being now processed, refund should be coming. And that's a solid 10 crore income to the company. So this is what is called an IBS, Integrated Business Studies. I call it IBS, Integrated Business Solution to the client, and that's how things happen. Um, so I was just, so you can see the common subject linkages. Foreign subsidiary transaction, subject consolidation in the India is affected, TP is affected, FEMA is affected. So management. So just to give some examples like this, borrowings governance override. Oh my God, if you borrowing governance override, what happens? Your interest rate could tick in. More collateral could be given. What happens when more collateral is given? It could affect your ability to borrow in future. Your debt equity may go for a spin. Your investors may naturally get worried what's happening. And it's also very much possible that your coverage ratio is could be badly affected, and it could invite penalties, etc. So things like this are also impacted. So that's the beauty of this whole subject all about. With this, what I will do is let me get to the first case study, which is on one FMCG company called Becky, which has also been put to you. I'm just sharing the file. I'll just do that. Bear with me as I share the file. Just it will take a minute for me to really do that. Yeah. I hope it is visible on the screen.
Yes,
Whatever.
sir. Yes, sir. It is visible.
Very good. And I'm just slightly making it little bigger. I think this is it visible? Can you all read it comfortably? Yeah. So this is the case study that I was trying to go through. Basically on FMCG. Just to give you some background of textiles, I don't know how far you're aware. Textiles in India has undergone a dramatic shift over the last 20-25 years. Uh, from stitching uh, clothes and tailors, neighborhood tailors being the important um, member of the family, which I've seen over the last 3 decades, to going to a shop and having look at the ready-mades, from large branded ones to the fast fashion. The latest concept which has hit on the FMCG textile side is fast fashion. Fast fashion is something which is done to attract Gen Z crowd, a term which I also understood now very recently, fast fashion, where the change which is happening in the fashion world is hardly 3 to 6 months, and the wardrobes of the Gen Z and the latest young consumers keep changing every 3 to 6 months as they are catching up with the latest trends in fashion. So this is the sort of background that textile industry is going through. The flip side to it, or rather the negative side to it, is that which I think is very very interesting and which I also understood, is that there is a huge amount it is adding to the carbon footprint. Please understand that this is very important for you. Please understand that as you buy a cloth, as you buy a shirt or any cloth, it goes through multiple processes, right from the yarn and right from the cotton or the polyester, which comes from the PVCs, and right from the petroleum, it comes from the petroleum byproduct onto, if it's cotton, it comes from cotton, goes through yarn to dyeing. Everything generates huge carbon footprint. It also generates huge needs huge amount of water. And it was very interesting statistics for me, although not relevant to the case study, that this sort of water consumption because of textile industry has more than gone up 5 to 6 times because of this. Of course, leading to things like pollution. But then it is today an address. It is seen as a status symbol. It is seen as an aspirational thing for people to be well dressed, well groomed. So that's the background of this Becky case study, and we will go through it. I will read it in about 5 to 8 minutes, and then we'll get into the questions as we address this. Becky Bond Limited, 5 minutes is what I'll go to. Its main paragraphs. Becky Bond produces successfully Becky and Bond brand of fashion clothes respective for women and man. The company has acquired a global reputation, so it's a global reputation company. The brands are well known. Becky continuously designs and produces new clothes for fashion market. The company produces 15,000 new fashion designs. That's something that is very large from a design perspective. The top designers are always based in Paris and Moscow. Paris has a huge reputation for Paris and Rome, Italy. Have got a huge reputation for new designs in textiles. You will see the exhibitions. You will see many fashion shows being held there. Becky has established itself as a leader in the global fashion industry, and they are known for the sophisticated designs and high quality materials, resonate well with both fashion forward consumers and those seeking classic styles. So you have different customers profile here, fashion forward consumers and classic styles. Dual appeal has allowed Becky to carve out niche in the crowded fashion marketplace. Becky hosts major fashion shows in cities around the world, and it showcases the latest designs in design excellence. Now it talks of distribution strategy. So you are going to hear the words distribution strategy, which is nothing but your supply chain. The company's distribution strategy is as robust as its design capabilities. Becky Bond primarily sells its products through network retail stores, some of which are company managed, and some of which are also in major departmental stores. So your supply chain is retail or your own stores and also departmental stores. So the dual channel it is retail store allows Vicky to maintain strong control over the brand. Okay, so keywords for you: brand, dual channel, and then companies 10% of sales come from less than 10% comes from Pune. Most of the stores are located in Bombay, which means it is highly pronounced and focused on the western part of the market. And it's a pure play fashion powerhouse. It commands 10.8 million square feet of retail space. In retail space, just to give you a perspective, people could have different metrics altogether. What is a square feet that occupy? And then what is my average footfall? What is the revenue per square feet? What is the footfall over the weekend? What is the footfall on normal weekdays? And what is my sales per square feet? So these are all very key KPIs. We call it key performance indicators. Key performance indicators. Okay. This vast infrastructure enables a company to meet the growing needs. The company's performance in 2022-23 is a testament to resilience and determination. After, of course, the pandemic of COVID, Becky Bond has made significant strides in both expansion and sales growth. Understandable, because there was revenge buying, there was revenge travel in everything. The consumers were fed up of 2 years staying inside the house. At the moment COVID was down, every industry has picked up. So it's seen a 53% growth year-on-year growth on revenue and EBITDA of 34%. So you look at the company's designs are all done by company's own staff. Manufacturing is outsourced to small manufacturing companies. That's a very key important point for you. The moment you see this sentence, you should be thinking, okay, what are the laws which will be? I'm not going to go with questions. I'll also take you through other positions here. So immediately when you think of outsourced manufacturing, small manufacturing companies, your mind should trigger MSME complaints, micro, small, medium enterprises regulations, which says that payment has to be made within 45 days. You need to get yourself updated in the government portal called Udyan. And, you have different, regulations to follow when you deal with MSMEs, particularly with respect to disclosures, etc. So one line here is allowing you to look at various other aspects. Although there's no question on MSME in this case law, I'm just pausing here and triggering so that you will appreciate that, okay, there is something that we need to be cautious. On the flip side, on the other side, I must also tell you that there are many companies which also do many other audits, like, they want to see that child labor is not implied. Child labor is not implied. In fact, I remember when textile exports are made, of course, here we are talking of domestic sales. When textile exports are made, particularly to large groups in Western world, including Walt Disney, Costco and all, there are special audits done exclusively for labor law complaints. They want to be sure that children are not applied. The small manufacturer, that is your vendor, is paying up PF dues under regularly. So just for this is only to educate yourself. This is only for education purposes, I'm telling. The company's policy of relying on large number of small suppliers has been successful in the past, but more recently, there are disagreements with the number of suppliers demanding higher prices for the work due to increase in their own costs, etc. So this is Becky Bond also has its own manufacturing subsidiary located near Pune, but this produces less than 5%, which means 95% is made by small manufacturers. So that's a constraint for this company. The company's reputation has been built on successful fashion designs, and the company displays its fashion in fashion fairs across the world, and design team members are continually searching for new fashion ideas. So orders are placed with manufactured goods are delivered to a central distribution point, and central distribution point near Pune, it is into all the shops. They say that many departments reduce their pre-orders for departmental stores, where if you go to the initial para, we said there are two dual channel supply, this one and own stores. So departmental stores have reduced the pre-orders and place supplementary orders only when they know that items are selling well, and what they are selling, what is not selling, etc. So they are trying to introduce JIT, just-in-time concept. This JIT is a great concept in inventory management, where companies don't want to lock up their money in inventory, and they don't want to pay interest on inventory holding. So One of the companies I audit, they sit on huge inventory. They sit on huge inventory. And I was discussing with the management, sir, why are you holding such a big inventory? He says 3 months inventory. My lead time for import from China is 4 months. And I always need to have 4 to 5 months stock so that my production will not get impacted and my supply chain will not get impacted. And fortunately, what he did, he repaid all the loans and he invested he plowed back his profits into inventory, and it became actually zero cost for him. So the members of sales team regularly check the strength of demand. So the company was listed on September 28th, 2023 in BSE, and it talks of companies, board of directors setting a financial target of 20% increase in EBITDA. Target could not be achieved. Alternate strategies are being considered. The following table shows the quarterly numbers. Each of them have significance. Rupees in lakhs, first quarter loss, second quarter profit, third quarter loss, fourth quarter is also loss. Year end, of course, PPT is nil projected. And of course, the results are prepared in line with the LODR regulations, which ask you to compare the last quarter, the previous quarter, the corresponding quarter, and the YTD and the year ended. So they have a reversal mechanism for grievances. Once you're listed, you are expected to have a grievance reversal mechanism where you are expected to figure out the number of complaints you get, you have resolved it, what are the status of those complaints, etc. It could be a change of address, it could be wrong dividend declared, it could be anything. So this is something very important. The submission of quarterly statements to the stock exchange covering matters related to public issue, right issues in November 23. So that is one statement for you. That is one para. You have to pause and read it. Then they have decided that Pune is a good growth region for them because the disposable income has improved. These are very, very interesting concepts. Okay, disposable income has improved. You found this month, just for information, India has recorded the highest sales in cars. Highest sales in cars. And the GST collection, despite the reduction in the rate, has again shot up all estimates. And that's one of the reasons why government is able to comfortably keep blowing back money in the infrastructure development that you keep seeing across the country at this point in time. So you can see here the next para, the CFO mentioned that the competition from Gen Z, Caterpillar, etc. So I don't want to get too much into this para. It's all self-explanatory and not much. But I would like to pause. The board is considering a number of alternates to improve company performance, including expanding business in Pune as quickly as possible, and aim to capture 25% of the market for fashion goods within 5 years. Customers are paying lesser price in Pune because of the location, and maybe necessary develop a new line of products with a new brand name to sell at a lower price. So this is called cannibalization. One of the important concepts in marketing is you never spoil an existing brand. You have to create another brand so that you are always seen at a premium. So I'll explain more about that. You see, I want to pause here for a moment and probably give you some fantastic example. Maruti. Suzuki was earlier selling cars through a single dealership. Okay. And they were doing well. I thought they were doing well. Suddenly, what they decided about, I think a decade back, they brought in a distribution point called Nexa. Two types of showrooms existed side by side in Maruti. One was, it is called Arena, the other is Nexa. I'll tell you, this is an amazing thing where they created a new brand. In that Nexa brand, they sold premium cars. Premium cars. And I had an experience of buying it from that premium. This thing, the shopping experience is totally different. You go to this Arena, which is also a good, brand of showroom per se. The shopping experience is also different. Right from the way a customer is treated, to how the vehicles are explained to you, to how the sale is concluded, to how they are, handing over the delivery. I think it's an experience by itself. So, without cannibalizing the existing brand, they gave customer a premium experience and told all the cars are unique and we want experience to be same across everything, excepting that certain cars. And this Nexa has got cars ranging from 8 lakhs on to at least 40, 50 lakhs. Same thing with the other showroom, which is Arena, which is the brand. There are also some, minimum 5 lakh, 4 or 5 lakhs from the Altos to the Victorias, which you see. So this is a classic example of how you create and reposition yourself in the marketplace with the two brands, which is why between Maruti and Hyundai, if you still continue to see, it continues to sell 3 times the numbers of Hyundai on a quarter-on-quarter basis. So that's something that uh, you know uh, is an example for you, which is what you see in the following paragraphs. Where customer experience they wanted, customer service they wanted to be different, and of course, online is always there. So I think this is a very interesting thing. Then, so consolidation strategy based on improving efficiency, reducing cost. There are several ways in which might manage. One strategy is considering sourcing of goods and using a smaller number of suppliers in order to achieve lower price and run for bigger orders. I think the last line is very clear. I want to reduce the number of suppliers. I want to have a better control on the supply chain. I want a better negotiating power. Instead of being threatened by various, many suppliers, I want to bring it down and see whether I can control it to future. This is a real classic business case for you. So now I think let us move into the. So I took exactly 10 minutes to read, but for a moment, if you pause, what are the important legislations which are getting affected here? I would definitely know SEBI LODA regulations are there. Company got listed, then we have something to talk of. The business side, there are too many things happening. This consolidation strategy. Then we have supplier strategy in place. Then we have MSME regulations to be followed because there are many suppliers. Then we have an accounting issue, potential accounting issue. Then we have quarterly results. Then we have tax provisioning. How do we address that? So a lot of things are going to be there. Very interesting case law. So this is how, once you read, I'm giving a hint to you, you have to pause for a moment, think through like this, and put in your answer paper. What are the legislations affected so that you are mentally prepared to now answer it. I hope you are able to get the sense of what I'm trying to tell you so that your answering will be very logical and you will not be in any sort of rush mode or a panic mode when you're trying to address the 4 questions, because you're expected to address 4 questions in a matter of 4 hours, each carrying 25 marks. So the first multiple choice question, I would think it's a straightforward answer for you. What time should Becky Bond submit financial results for the quarter ended September 22 stock exchange? Submission, there are 4 options given. Obviously, option B is the correct one. Submission of financial results is required within 45 days from date of from the end of the quarter. That is item number C. So I think C is the right answer, no doubt about it. I see that also in the case study, which I see. I think the answer is C, because that is a correct answer. Case study C. Regulation 33.3 of SEBI LODR requires submission of financial results within 45 days from the end of the quarter, other than the last quarter. Last quarter, we are expected to submit within 60 days. Audited financial results have to be submitted within 60 days. So that is the answer here. Going to the second question, which is again SEBI regulations. One of the things you people must be aware. I think you are let me share some experience, because we have plenty of time to discuss and a lot of nice things to discuss as we share the knowledge to the younger audience here. India is witnessing a big IPO boom. Okay, a big IPO boom. I've seen this IPO boom sometime in 90s, early 90s. Then there was a lull, and then I saw some boom in 15 when the new government came. Now I'm seeing another massive boom, but this time I'm quite surprised the boom is for the real, because people want to unlock value. And one of the greatest ways of unlocking value is going public, because the discovery mechanism of valuation happens in the marketplace by investors trying to buy your share at a particular price. Either it has a relation to your EPS or a book value or the PE ratio, which of course combination of all the three, obviously. Of course, dependent on the performance of the industry, performance of the company, the quality of the promoters, the quality of the governance, the quality of the accounting. All these factors go into determining what is the real value that you are able to get from the marketplace in the stock market. Somewhere this realization has come in the Indian entrepreneurial mindset, and I am witnessing now, we are all witnessing collectively a massive IPO boom. Of course, in this IPO boom, you will find good promoters, you will also find not so good promoters. People who come, take the money, and then vanish. Everything is going to happen. But so that puts you in an enviable position. While there's an opportunity, you as a chartered potential, you as a future chartered accountant have to be very, very cautious. Apply your judgment, apply your skepticism, and be very careful when you are analyzing a particular situation, because ultimately, as a professional accountant, you and I are responsible to the investing public who put their trust on us, who believe our signature, who continue to trust our signature, although there have been some mishaps in the past. So I'm just putting this more as a matter of conjecture and caution to you, so that you are aware that such a thing is also happening in the marketplace. So now let us go back. Let us with this background, I want to introduce the subject of which of the following is an unpublished price sensitive information as per SEBI Prohibition of Insider Trading Regulation 2015. So what is this background of this legislation? Why is this legislation required? What is the significance of this? What happened in the past? Okay, and India has seen many cases where the promoter or his relatives or his friends, known people, etc., or people working in companies were privy to information which was not available to general public. It's a very distorted situation. It used to be a very distorted situation where people misused such a privilege, such an access to information, and either they sold the shares or they bought the shares, depending on what sort of news they have. So we call it, the manipulation in the market terms. It's called manipulating the market using price sensitive information. It is called price sensitive information. So SEBI came with these regulations because SEBI saw too many cases where promoters had made money, and you will find very interesting SEBI orders are there. You go to the SEBI website, huge number of orders are there where SEBI has castigated promoters, levied penalties on them. SEBI has also put restriction on them to access capital markets. So it's so on and so forth is done in the uh, SEBI regulation. And at one point in time, SEBI decided that enough is enough, time for regulations. And that is how this regulation came, SEBI Prohibition of Insider Trading Regulation 2015. This regulation discusses instances where you are holding price sensitive information. I recently circulated this within my firm and gave them situations where we hold anything and everything which is aiding the company's growth or which is impacting the company is a price sensitive information. Anything and everything which is impacting the balance sheet or the P&L in a significant manner is a price sensitive information. Anything and everything which gives a leverage and which is significant to the market, to the investor, is a UPSCI. We call it unpublished price sensitive information. Financial results, classic example. You are having the results in front of you. Nobody has it. You are finalizing. You are a chartered accountant. You are sitting in the controller department. You are also an auditor. You are also having the numbers. You are going to clear the numbers. That is why I am correlating now. You go back to the Institute Code of Ethics. You go to IESBA. You go to Chartered Accountants Act, and you will find that a chartered accountant has to be independent of the company that is auditing. and he has to declare to the board of directors that is independent. He has no financial interest in the company, which is why the person who is auditing the listed company can never buy shares of that company. And if he comes across, if he has bought, then he is severely penalized. And it could be even barring the chartered accountant from being a member of the institute itself. So that is something that, information on a potential JV is a UPSCI, unpublished price sensitive information. Information on a potential sale is a UPSI. Information on the resignation of CEO. Yesterday you saw, it's in public domain, so I can share the information. The chairman of a largest conglomerate in India has stepped down. Immediately, you see the market, has reacted quite strongly to it, and there's an erosion in the market cap. So this is the UPSCI. This is the UPSI. So here in this question here, which the following is an unpublished pricing information as per SEBI norms, financial results, changes in finance and accounts team, significant improvement of business in material subsidiary, submitting annual financial results. Others are all very normal activity in the company, people coming and going, changes in the finance team. I would think change in the CFO is actually to be informed to the exchange, KMP. You have to inform KMP to the exchanges. Any resignation, you have to immediately inform CEO, company secretary, CFO, production, vice president, any person who is very critical, VP R&D, which are very critical, which are mission critical to the company, you have to inform to the exchange, as long as you are declaring them as a key management person. Okay, so this is something that you have to understand. So please be aware of this. Take effort to figure out where it is in SEBI regulation. Be ready with it. LODR 2015, you have to be LODR, SEBI regulation, LODR, including latest master circular. My recommendation is that please look at it, read it once, and be aware where the answer is, so that you can immediately refer it when it comes to any answering any question in the case series that are going to be submitted to you. Okay. So the next question is, Wikibond India has start in the quarter with a listing of 5 investor complaints. During the quarter, it received 15 complaints. It resolved 12 complaints. I think it's a simple arithmetic. Determine how many investor complaints remain unresolved at the end of every quarter. You can find that in the publications itself. From now on, my recommendation is that since you are a chartered accountant student, take one nice, go to Economic Times website, go to Times, Indian Express Finance, any newspaper. Take pains to go through the SEBI LODR format. See what are the contents in it, right from the CAN number, name of the company, what is the former name of the company, registered office, etc., etc., to the results. Read the notes. What are the notes? What are the notes? And what is that the company is doing? Has it been subject to limited review by the audit by the auditors and then approved by the audit committee? Read everything, and then also there you will find investor complaints which have been addressed, etc., etc. So here 5 plus 15, 20 minus 12 is 8. 8 is the right answer. So that's how you. I'm trying to bring a perspective to you, so that as you read a case study, you are getting into a mindset of analyzing a situation from a multi-dimensional angle of various legislations and regulations in place. Okay. So although there's no MSME question, I would tend to think it's actually a fantastic subject matter for you to analyze, debate, and ensure that the supply chain can be properly managed when you have very good supply chain of MSME guys. So so let us move to the question number 4. As per SEBI LODR regulations, company must submit its quarterly compliance report and governance. These are dates. So I think the quarter ended on 31st March 2024, by which date you submit its compliance report. I think it's 21 days. So I think the answer that I'm given is 21st of April. According to Regulation 27.2, the listed entity must submit a quarterly compliance report on corporate governance within 21 days from the end of the quarter. Here, corporate governance side, what I would suggest to you is take down one balance sheet of a large company. Okay, maybe Infosys or TCS or HUL, Hindustan Unilever, etc. And go through the contents of it. Go through the contents of it. Okay. I can think of many questions here. I can think of uh, management discussion analysis. I can think of so many things. Think of it, and you will find something called report on corporate governance. And you will also find an excellent, detailed, compliance reports, meetings held, REM committee meetings held, who was attended, who was not attended. You can find the quality of the governance from these things. What is the commission paid to directors? How many meetings a particular person was absent? How they are, how is their policy on rotation followed? What are the resolutions passed by the members in this regard? Then you also, it would be very interesting for you to figure out the background of the directors. What is their qualification, experience, standing in the marketplace, their reputation? Everything is covered under the wonderful word of corporate governance. This is exactly what we are expected to find. It's not a mere 21 days, but there is so much going in depth into it. And today I work with one potential service provider to figure out whether independent directors have discharged their obligations. A separate subject. I don't want to dwell into it because that is not the agenda for today's discussion. But corporate governance has got such a vast meaning. So please go through company secretary's report. An independent company secretary generally gives a report. Please go through all those things just for academic sake. I generally go through it just to update myself very quickly what's happening in the marketplace, etc. I'm sharing that experience with you. So the next question, again, a very interesting question. Why is it necessary for Becky Bond to create a separate brand for lower price products when expanding in Pune? Four options are given: to increase the production cost, to align the higher pricing strategy of the existing brand, to avoid diluting the premium image of the existing brand, and to compete with the luxury fashion brands. So if you were to ask me, sir, what is this strategy all about? Is I think I explained to you with the wonderful case study of this Maruti, how they made the showroom experience different by creating two different brands of showrooms. Similarly, you will find, in textiles, I can really think of Majora Coats, Aditya Birla Group. They have a premium brand, Louis Philippe. They also have another nice brand called Peter England. Peter England also sells, is sold by Aditya Birla. You will also find Louis Philippe sold by Aditya Birla Group, a classic example. So why a brand called Peter England? Because they don't want to dilute the existing premium brand. So your answer is already there. To avoid diluting the premium image of the existing brand. So there is a huge, what FMCGs generally do is they will never dilute the image of a particular brand, but they will create more and more new brands. And so that the customers will always have a wider choice and none of the brands are killed. You look at Horlicks. It's one of the finest brands. It's currently held by GSK. You look at brands, Horlicks is one great brand. Protein-X is another great brand. Boost, fantastic brand. I think you got brands. People actually ride on brands. Then now you'll find. I was just to give same FMCG fast fashion goods. I saw latest trends in this shoes. Some deep research was done by us. One of our clients actually is in footwear market in a big way. And I had a very detailed discussion. I was stunned to know that one of the KPIs for them is the number of pairs every Indian owns. Actually, we are way below the global average, which is why he says footwear industry will do very well. And what he said, sir, we have got 2-3 brands. We don't want to dilute most of the market for them is mass market. And he said that if I use the same brand, which I use for mass market to the premium segment that I'm going to offer, nobody will buy. And then he said, for the premium market, we are launching a new brand. So the idea is that you don't dilute the premium range. So the answer for 5 is in C. to avoid diluting the premium range as existing brand. So the idea of spending this much time with you at this point in time, gentlemen, friends, is that you become very holistic in your approach. You begin to think like a true businessman and a true business advisor. And the strength that you are going to bring to the table is your ability to interconnect various aspects of regulatory framework, business framework, auditing framework, accounting framework into one single integrated business solution. As long as you get this concept correct, I think you have a great you will have a great time when you are writing your IBS paper. Because when I was looking at the syllabus, when I said how do I prepare and all, I realized that this is actually fantastic from a common sense point of view, because you are it doesn't test your book knowledge. Please understand it. It tests your general common sense. It tests your knowledge on various acts. It also tests your ability to verify, cross-refer, and look. What is the meaning of a true professional? A true professional, as a professional in practice now for so many years now, the only thing that I understood is that a good professional is a person who knows where to find a solution. All we need not know. It's not possible also. The entire gamut of solutions is not possible by one chartered accountant. Like I assure you, it will not be sufficient in a lifetime. But what we are expected to do is guide the management, be with the management, figure out where the solutions are available. It could be with the independent consultant, could be in, fortunately today we have got excellent AI health platforms. We have got our own institute, ChatGPT. It's fantastic for you to use it. So where you find solution, that's exactly the hallmark of how do you find a solution, where to find a solution, how do you integrate it, how do you fit it? That's what it is. Question number 6. When should Becky Bond submit its shareholding pattern statement to the recognized stock exchange? And the answer, I think, is the shareholding pattern should be submitted by 19th, by 20th November, within about the 10 days from the closure of the listing. That's what is the answer. And Regulation 31(1), the listed entity must submit the shareholding pattern within 10 days of any capital restructuring. So that is exactly what has to be done. The moment you complete it, you will have to submit within 10 days. So the company must submit the shareholding pattern by 20th November. That's the correct answer. Moving on to descriptive questions. The applicable income tax rate is 30%. The CFO's view that no tax expense should be recognized in the quarter. If you see, I told you very clearly that 3 quarters there is a loss, 1 quarter there is a profit, and the year end there is a loss. CFO says that income tax, need not be recognized because no tax is payable for the year. Is the CFO correct? And if not, please describe the rationale and also the amount of income tax that should be recognized. Well, the logic is very, very simple. Always simple concept. Don't even have to refer. It is for the period. Simple. It is for the period. P&L is for the period. Balance sheet is asset. Over. When you say for the period, over. It's profit. I need to make a tax provision. Forget what the standard says. Now you go back and see your logic answer. So the period is for 3 months here. July, August, September. Okay. In that I make a profit. I have to definitely make a provision. This is my logic answer. Let me verify what the accounting text says. Okay. Very simple. The general approach, para 30C of India is 34, it says. Income tax expense is recognized in each interim period. And of course, India is 34 deals with interim financial results. Each interim period, based on best estimate of the weighted average annual income, amounts accrued for income tax in one interim may be adjusted in subsequent interim period. If the estimate, the general approach here is of estimating the effective tax rate should be used everywhere. For example, entity results in the current interim period is expected to be wholly offset by results in future interim period. The consequence of this approach is that conceptually, even if the overall results for the year was expected in nil portion, an effective tax rate exists, still need to be applied. The effective tax rate is 30%. The 30% of this is 255. So the effective tax rate would be 30% as it lead to nil charge. Therefore, income tax expense will be recognized in each interim period. The tax charge for the quarter ended 30th September is 255 lakhs. So I think that's a correct answer, and that's also the right way of looking at it. So that's what the standard says. That's how we are also answering. Uh, the next theory question is: assess the competitive environment in the segment of the fashion industry in which Becky Bond operates using Porter's five forces model. So this is a very nice subject for us, Porter's five forces model. Basically, we are talking of, it's a framework for, what is the Porter's five forces model? I leave the theory partly, but conceptually what it is nothing but a framework for analyzing the competitive intensity and profitability potential of an industry developed by Michael Porter in 1979. There are five quadrants to it. I call it five quadrants. I would call it five important points or five quadrants, five circles. You may call it anything, but there are five critical points for us. One is entry barrier, then supplier power, buyer power, then industry rivalry, there is competition, and substitute threat. Substitute threat. So we have to analyze Becky Bond's company. The question that is asked to us is: assess the competitive environment in the segment of the fashion industry in which Becky Bond operates using Porter's five force model. So you probably need to think through this answer, and well, you will find that I'm of course the answers are here. Let me I have not given the answer, but I would like to discuss. Then you will be in a better position to figure it out. Entry barrier. Let us discuss these five forces. Entry barrier. Well, there is a huge entry barrier because Becky Bond has got a premium brand. It has been in the fashion industry for a long time. It has got designers working across. It is just not possible for you to create a brand overnight. So there's a massive entry barrier. Your reasoning is huge entry barrier exists. It may appear to be FMCG, it may appear to be easy for you, but the entry barrier is there. In what form? Brand. I got a premium brand. I got fashion shows going. I got customer recall. I got dedicated customers. All these things are going to be very difficult for competitor, replicate overnight. Supplier power. Well, here I would think the answer that I'm thinking is the suppliers are small, manufacturing firms, and there is generally a threat for these suppliers from these suppliers. They may not have great bargaining power, but there's a threat of quality. There's a threat of supply disruption because they're not very strong. I can have a problem in quality. I may not have a problem in threatening. It is not a single supplier for me. I can shift from one supplier to another supplier. I can develop my own supplier base, which is why you will find in one of the lines in Becky, they were telling that we want to consolidate. The last line said, I need to consolidate. So that's a bargaining power suppliers. So I think that's an answer to that. Then buyer power. I think there is a definitely, buyer power. The customers are end customers or departmental stores. The power rests with departmental stores to give you space or not. So you'll have to be very cautious when you negotiate and deal with your with the suppliers. You have a 10.8 million square feet of retail space with you. So you'll want to probably think through, analyze which is more profitable. Departmental store is profitable, or whether own channel is own stores are profitable. Analyze it carefully. Sit with the business finance people and then make the decision right. It's an amazing thing, and you have to think through. And also, you must understand what is going to sell. So I always tell people, put a pie diagram. One of the important things I do in an audit finalization is I put pie diagrams. I use graphs extensively. I want to understand region-wise sales. I want to understand my top distributor sales. I think it's imagination for us. How much we can manipulate this data and then figure out how we are using it for our advantage, and then figure out how much leverage customers will have, and then figure out are you on real threat from customers. If the data are going up, it's a sign for me that customers seem to be having better bargaining power. So these are attendant points. So in this case here, the bargaining power of customers or department store and customers in their own shops, they seem to have some bargaining power, but not much. I can still sell my premium branch at a good rate. Then industry rivalry, definitely there is a good competition from the competitors Gen Z, etc., etc. You please write about that. And basically, and then the threat of substitutes. There I would say no substitutes for direct fashion. There is no substitute for a brand. You may have good substitutes in form of compete brand, Gen Z, etc. So you might have to really think through how do I position myself vis-a-vis my compete. So when you are assessing this, you may want to revise your strategy with focus on supply chain, with focus on repositioning your premium brand vis-a-vis compete. Entry barriers are there, so you may not really worry about it. But with the existing brands of Gen Z or whatever, Caterpillar, etc., how do I improve myself? Should be a big strategy for you. You must discuss it within the company and the salespeople, and then come out and probably see how you want to keep the prices, whether you want to put charming. There's a concept called charming prices where actually reduce the price and see how I'm, bringing down the price, and then see how I do it. The last question is very simple. I think not much. Evaluate the supply chain about Becky Bond, identifying current weakness, suggesting ways to overcome. I think the biggest weakness is small manufacturers located in Nagpur and other regions which are far away from my customer place. You see the customers, you see they compete. They have the manufacturing plant near Bombay, so they are able to send the goods to the shops in Bombay and make use of the demand. Fast fashion is one industry where a lot of impulsive buying happens. There's a concept of impulsive buying. There's something customer sees in the shopping window, is attracted by the mannequins which are kept there, and he goes in and buys. It's not a planned purchase. Many times you go to the mall, you end up buying. It's not a planned purchase. Okay, it's not. You just go, you like it. It's a fast fashion. Then you come back and say that how do I do it? So that defines this. So the biggest thing is uh, they must form strategic partnerships with the key suppliers. They have to probably control the suppliers through giving them good raw materials, and have long-term contracts with the better pricing. Incentivize them if you are able to give the product within this day. If you are able to supply without defect in quality, you have to incentivize them so that they are part of your process, and then also you can cut down the lead time, and then you maintain a strategic. You find that this lead time between design to end is 15-20 days. So you want to probably bring in just-in-time concept, reduce the buffer time, keep that as a KPI, and invest in technology to improve your supply chain visibility. So these are general strategies in place which you can think of just from the para I'm reading. I'm not bringing anything which is out of context. So I think that sums up the first case study. I wanted to spend exactly 45 minutes, and I'm this case. What I'm going to do is into this company, which is a big subject which our Deepak ji was also mentioning. I'll probably take you through that as well, and then come back. So I'm going to stop sharing the screen and get into the next company, which is the case study, which is the tea company case study. And just give me a minute time as I change my. Is it visible now? Is the screen visible now? Refreshed, is it visible? Yeah. I hope the screen is visible. Very good, very good. Thank you. Yeah, yeah. Are you able to read it? Should I? Is it okay now? I have made it a little better in terms of. Yeah, very good, very good. Thank you. That's very nice. So that's good. So here, case study 3. What I will do is I will start this case study, then I will take a 2-minute break and I will again resume. So I need a 5-minute break at about 8 o'clock, 8:05. But I will let me read the case study and then we'll get into the question. Tea, as he rightly said, is a sunrise industry. Okay, it's an industry discovered in Ceylon, and I had an opportunity to visit Ceylon. It was discovered in Ceylon by the English, then brought into India, and it has been a big employer generator for last so many years now. Of course, it is on the mountain slopes. Obviously, it is on hill stations, etc. One of the most consumed brew. Now, coffee is of course catching up, but tea will continue to remain very dear to the Indians, the world at large. And as Deepakji rightly brought out, we have huge types of tea, the fine dust tea, the tea leaves, exotic drinks. I have seen uh, connoisseurs spending huge money on tea. I was surprised at the price ranges when I went to Ceylon last year, Lanka to Sri Lanka. I was shocked at the prices, 10,000, 15,000. And they were showing me the difference, tea leaves and tea dust, etc. So that's the beauty of the industry. Very large, very, very intense, and plantation, and very, very few companies are in the entire value chain. So let us get into this company. The company owns several plantations in Northeast. Started out as a producer of tea leaves. They have their own processing centers within the plantation estates to dry, ferment, and cut the tea leaves. The company would then auction the tea leaves to the traders, who in turn would sell them to the tea companies, downstream supply chain, in order to be blended, packed, and resold to the customer. RTL continued to be producer of tea leaves. They continue to be producer of tea leaves. Okay, I'll pause here. That is a fact you must garner in mind. The first para, you have to, every para, there is something unique that you must keep it in the back of the mind. Okay, continue to producer of tea leaves until the mid-80s, until which time it only auctioned the tea leaves to the traders. Over the decade, the popularity of the tea as a beverage increased manifold due to clever and attractive marketing campaigns. It is told, it is actually taunted as a good health drink. Okay, I think there's no doubt about it. At least gives you a stimulant more than anything else. It's a stimuli, I would say. Of course, green tea, people have their own views. You must consume one hot green tea is actually very good. It is really good for your this thing. Now, medical research says that fatty liver, etc., this could be a concoction. Marketing as health drink, ailments like cold, flu, body ache, tea is a beverage slowly became popular. Tea has been an organized market, an organized branded market. It also is an unorganized, unbranded market. Different versions of brewing and marketing and making tea were practiced, and this concocted a success story of exponential proportion. Increasing popularity of the beverage prompted RTL to expand the scope of the business, which is what you see. It wanted to continue its plantation business. Now it also wanted to expand the business to blending, packaging, and marketing of tea. So it is doing something of forward integration where it wants to maintain the entire value chain. It wants to be in the entire value chain. Deepak rightly mentioned, Deepakji, that this case study they wanted to be in the entire value chain. It is called the I would call it the vertical integration. So we have to see whether it's vertical or horizontal. It would increase the production of the tea leaves in this plantation using both existing estates as well as acquiring newer estates to increase production capacity. Tea leaves will be dried, fermented, and cut at the processing within its plantations. The management of RTL decided at that point start blending, packaging, marketing its own tea. For this, it built and gained ownership of necessary factory resources and infrastructure for blending, packaging, marketing tea. Production resources were owned and controlled by RTL. This packaged tea would be sold to the wholesalers and retail dealers, who in turn would be selling it to the final customer. Okay, so it became a full-fledged company by mid-80s. The market was saturated with many sellers. Most of them bought tea leaves from traders at various auctions, blended, packaged, and marketed the tea. For these other supplies, it took approximately 80 days from the time the tea leaf was plucked to the time the consumer purchased. It's a very important statement for you. My lead time from tea leaf on to marketing the tea is 80 months, means 3 months. They catered to consumers from all shades of society. Premium tea dominated the branded market, while people who could not afford it were satisfied with the unbranded loose tea. Okay, RTL decided to establish itself in the branded market. Unbranded tea was perceived to be lower variety. It's a fact. RTL conducted detailed market research and found that consumers from different regions had different taste preferences. Very, very. So another very interesting thing for you is market research reports. As a chartered accountant, you must see as a budding CA. What are these are very unique concepts for you. What the market research report? I'm actually on a side note. Let me digress for a minute, and I want to tell you how happy I am to see the plethora of information is available to you. While passing the exam is definitely on the top of the agenda for you, I'm equally excited and enamored at the flood of information, the flood of new concepts which are made available to you. Market research report. What does the market say? What is the total addressable market? We call it TAM. In the startup environment, it's called TAM. Total addressable market. Okay, here we talk of tea. What is the total addressable market? State. How many consumers? So you can actually dissect and get all the information. And then you find that each region has got its unique taste. South Indian filter coffee is not available in Delhi. What in Delhi you will get is a coffee machine coffee. You will never get a filter coffee. But I was surprised to find that now 5-star hotels and other hotels are also offering filter coffee. Whereas in South, you are also finding masala chai. And now masala chai is also coming as a ready mix. So a lot of things are happening in the marketplace. So each consumer, so that is how you address consumer preferences. Bihar and Jharkhand represent, tea leaf consumers. Maharashtra and Gujarat on the western side, they prefer tea dust. So now two new concepts, tea leaf and tea dust. So I did a research very quickly. Tea leaf is nothing but fresh, large, and grounded, and the brewing is very light and diluted. Dust is something which is much more thicker, a little more pungent, I would say, but that's what sells. So people ask you whether it's a fine tea, is a tea dust or tea leaves. So you can see the CTC's cut, curl, and one more word they put. So RTL created different brands that cater to different markets in terms of consumer preference. Leaf tea or dusty tea. It's very interesting, very beautiful idea. The leaf tea will always be very light. You can't add milk to it. You have to take it only as a black tea. But a dusty, you can add milk and it will be a good one. I think this is what at least it says. The quality of the RTL's prepackaged branded tea was kept higher than the unbranded tea sold as users obviously want to maintain premium, which you saw in the earlier case study. Premium brand must be protected. They will always have a command a better price, better premium, because the margins will be healthier and better. It sold premium brand tea as well as economy brand tea in Bihar and Jharkhand. It sold premium dusty and economy dusty in Maharashtra and Gujarat. So that is okay. And RTL further aimed to deliver the tea to the final within 20 days. So you saw the earlier para, they were doing 80 days. Now they want to bring it down to 20 days from the time the tea was plucked from the gardens onto. So there is a very unique thing here. Beautiful concept here. Plucking up to that point, one aspect. Then processing, another aspect. So, so please remember this in the context of what questions will come, what is agriculture income, what is India's 41 applicable, etc., etc. So your mind should now trigger all these things. The vision statement from RTL was reframed to be the most admired tea company across the globe. They say, the normal things, enhance customer experience by making tea a global beverage of choice, understand influence, taste set, influence of bringing unique, affordable tea to discerning palatal customers. Okay. 2023, the market size is 34,400 crores. Branded businesses constituting approximately 74% of the market value. For 34,000 crores, you're talking of a branded market of nearly about 25,000 crores is branded business. Global tea market is 50 billion market, is a massive market. Main demand coming from black tea segment, which is what I told you. RTL has emerged as market lead, commanding 60% domestic market. It is now a listed company in NSE. The moment you read the word NSE, so your mind should trigger. Potential questions on compliance could come, SEBI compliances could come, potential questions on corporate governance and all. I have to be careful. So all these things, keep it in as you read along. All these things should keep on. You must make side notes. I love this concept of side notes, which is what I still write. I still use pen and paper. I keep all the. Whenever I go for a meeting, I make it a habit to jot down the critical points in a meeting. Or not all points can be written. So all the critical points, critical words have to be jotted. Here you can say NSE exchange listed. That's an important word. Domestic in other segments like green tea, fruit tea, herbal tea, decaf is picking up, taking note of the RTL conducted market research. And the findings revealed that consumers are becoming very health conscious in their choices, which is what Gen Z now is. It's obvious. We are seeing that in the marketplace. We are seeing that in the customer preferences. And it is projected to grow at 8%. According to the shift, our study, the shift towards healthier drinks will grow at least 8% of the beverage market within the next 3 years. So that's a big segment that you have to look at. So now it talks of Tea King is a UK-based company that produces tea bags. Small sachets of tea bags are dipped into hot water and conveniently brewed within a cup. The sachets can be disposed of after use. The tea bags are popular because anywhere, anytime concept. The company has a net worth almost 3 times that of RTL. Okay. TKP has a deep market presence in the United Kingdom, USA, and Europe. Despite its global presence, the ownership of TKP has changed hands frequently every few years. TKP imports tea leaves from various countries, and the cost of imports has been expensive over the years. RTA recently gained the opportunity to own a controlling stake in TKP. Very, very important line for you. We have made an overseas acquisition. The company has made overseas. Please put that as a side note point. I made an overseas acquisition. Meaning, what are the triggers for me today? Well, immediately, okay, FEMA implication. Okay, how do I find money? My net worth is only 1/3 of that fellow's net worth and size. How am I funding it? Where is the money coming from? How am I going to finance my interest cost? Will I have a going concern issue? What will be the impact on my net worth? What will be the impact on my turnover? Consolidation challenges is a business combination. All these things you can write aram and keep it and try to figure out solutions. So this is how you look at a case study. I'm actually, enamored by the depth in which the institute has gone to prepare these case studies. So the idea of pausing reading is to encourage you to write all these things as you move along, so that you know how you genuinely read a case study, not only from an exam point of view, but once you qualify as a professional, how it will be helpful for you in your workplace. That's my idea. This is a prestigious development for RTL. This is exactly the akin to Tata Tea taking over Tetley in UK. Okay. Tata took over the brand Tetley. You will find the brand Tetley in all the shops in India. There is nothing but the Tata Tetley PLC UK, which was taken over by Tata Consumer Brands. This is a prestigious development for RTL as it is trying to increase its global footprint, particularly in UK and USA. The advantage that most of the owners of TKP did not have was that they didn't have control over supply chain. They didn't have supply of raw materials. Whereas here, RTL, the first para you said, they have plantations in the northeast and south of India, which is fantastic. That means my entire value chain, I have a backward integration. I have a huge opportunity to supply my own tea leaves to the UK opportunity. This for information. RTL is better positioned to scale up tea leaf production to meet TKP's raw material requirements in a cost-effective manner, which means transfer pricing will come into picture. Excellent point. So that is another legislation that could get affected. Since the deal is much bigger than RTL, so it has resorted to significant amount of debt to finance it. This is what I told you. The deal has approval of the majority shareholders. Other regulatory approvals are in place. So competition commission could be there. Any local laws in UK, that those people have to give this thing, that is also there. So in this dynamic field of food production, external factors such as unpredictable weather conditions can severely affect operations. Recognizing the importance of proactive risk management, RTL has implemented a comprehensive strategy to mitigate potential disruptions and protect its plantations, especially in the northeastern region. This includes ensuring adequate insurance coverage, positioning RTL to effectively navigate the uncertain associated cyclones and adverse weather events, which means from a business perspective, you should be worried about insurance, whether I have got adequate insurance, whether will I be in a position to bear the loss, should anything happen, you know, what is my policy, what does it say, is it a natural cover is there, uh, is it covered? All these potential, when you are taking a business decision, when you are taking a policy, insurance policy, you will have discussed every single condition. That is why large companies will have separate manager exclusively dealing with insurance contracts. His only job is to sit with insurance companies and negotiate. Today, of course, you have got insurance brokers who are doing the similar job through IRDA regulation. That's a knowledge for you. And then RDL's accounts are prepared in accordance with India's. That's fine. I think so. What I will do is I will pause for a moment here. Give me 5 minutes break. I will again join you at exactly 8586, and I'm leaving the screen as it is. I'll just come back in a 5 minute break. You kindly give me. I'll just take the 5 minute break and I will join you in exactly 5 minutes. patiently waiting. I'm back. I promised 5-minute break. Multiple choice question. Let us get into it as we move along. We'll find useful solutions to it. What are the questions? Each of the concepts let us explain to you, so that you really get solid value at attending this session. The first and foremost would be I am probably privy to some answers, but not to bother. I will take you through the session in depth. Which of the following statement is true regarding the current expansion plan of RTL? Current expansion plan of RTL, acquisition of TKP is horizontal integration, while expansion is in 80s is vertical integration. So, current expansion plan of RTL, acquisition TKP is vertical integration, while expansion is horizontal integration. Current expansion plan of RTL and expansion in the mid, both are vertical integration. Current expansion plan of RTL and in the mid 80s are both vertical integration, which is the correct answer. So the right answer is it is TKP is in the same business as RTL. There's a difference. TKP produces tea bags. RTL actually produces the entire gamut of tea. So I would think it is a vertical integration. It's a horizontal integration. It's not vertical, horizontal. You are expanding in the same line. Only thing is that you are having tea brands. You never had tea bags. So it is a horizontal integration. And the expansion in the 80s is a vertical integration. Vertical integration means you are moving up the value chain, where you are actually moving from production of mere tea leaves on to producing the end product. So that is the correct answer. So the correct answer is actually in A itself. That's the right answer. So I think that gives you the answer. And the second multiple choice question for you is the regulatory authorities in India have to assess whether there's any breach of anti-competition laws. So here, pause for a moment. What is anti-competition law? Okay, there used to be an act called, of course, the Competition Commission. Competition laws are different, but we all started with the MRTPC, Monopolies Restricted Trade Practices Act, meaning you are doing everything unethically to prevent competition from entering. So you have to go through the Competition Commission, CCI, and the regulatory authority have to be classified, have to be satisfied, and you have to go through this Mendelow's matrix, which probably talks of the regulatory authority. The Mendelow's matrix is one of the matrix where they've got 4 things, which is power, etc., which they talk of. I wouldn't want to go in depth into it, but suffice to say that what is the right answer? The regulatory authority is a marginal player with low interest and low power. The regulatory authority is a key player with high interest and high power. The regulatory authority is influencer with low interest and high power. Is an affected player with high interest and high power and low power. So I think what is this? What is the role of the regulatory authority? He's at best, he is not a player in your segment. He is an authority. So at best, he can only influence. It's a very common sense answers only. I don't want to, there's nothing for us to feel threatened. He's an influencer. Can he start a company? No, he's not a player at all. So the word player will not be even applicable to him. Forget about whether he's applicable or not. Player is not applicable to him. And then it is a low interest, and he is an influencer with low interest and high power. Has he got power to stop the transaction? Definitely has got power to stop the transaction. So answer is C. The authorities have low interest in whether acquisition is successful or not. They have high power. Since there is indication that this RTL can have unfair acquisition, unfair advantage to the competition, they can refuse to approve. Hence, information should be provided to them inadequate so that we don't face any such adverse reaction. So I think that is what it is. That's answer to question number 2. TKP has used the tagline anywhere, anytime to market its tea bags. With reference to the value proposition map, please map the following. So it says, let's brewing tea means you can, what is the element of the value proposition map is brewing tea. Customer profile is pain. You can remove the customer's pain point. You don't have to brew the tea. You just have to, dip it in hot water. Finished. Customer health. It is a In my view, it is a gain, because you can have many types of drinks. So you can have then green tea. It is a pain. It is actually a gain creator. And tea bag, since it is a tea bag, actually what you're doing is you're avoiding the customer to take the tea wherever it is going, and probably you're avoiding that. And the best way to put it is that it is a pain reliever for you. Yeah. So that's exactly the option which is available in option A itself. So that's it is. Fourth one. This is a very interesting question, and I would probably urge you to let's work on this question. Let us have a debate. Let us discuss this a little more in depth on what exactly it is, on the concept of throughput. Let us read this question. The blending machines at Nagon, Assam, blends tea leaf varieties produced in plantation RTL. Due to increased seasonal demand during the monsoon, the production of tea increases in this factory for months May, June, July. Very good. And that's also the monsoon months. June is effectively the southwest monsoon sets in, and across the country it has a overbearing effect. It moves across the plains to the Deccan Plateau and on to the northeast. Due to this availability of time on the blending machine is limited during these months. There is no immediate plan to increase the blending machine capacity since this is seasonal variation demand, and hence the constraint is short term in nature. Very interesting points. The constraint is short term in nature. I don't want to block my money. I can't have debt capital. I can't be servicing that. I can't be paying interest on an asset which is I'm not going to use. And this is a constraint. It's not a permanent constraint. It's a temporary constraint. The concepts so you can learn now. The concepts you're learning is that there is something called temporary constraint. There's something called permanent constraint. Permanent constraint you try to avoid. Temporary constraint you learn to live with it. So at the same time, the production manager at Nagon factory wants to determine the order and the quantity of the tea blend to produce in order to maximize profits. The selling price and cost, as well as the bottleneck production details, are given below. Very good. So the idea of the production manager is to maximize the profits, and the selling price and cost per kg, as well as bottleneck production details, are given below. Very simple. What is the uh, selling price? 500, 600 in blend 1, blend 2, blend 3. Material weather variable cost S minus material cost is 300, 400, 500. So you know it 200, 200 and 300 is the contribution that they are making blend 1, blend 2, blend 3. Time required at the blending machine, bottleneck resource time. That is a bottleneck resource time. That is a bottleneck I have because I don't have big number of machines. 20, 30 and 40. That's the minutes I take. The factory cost is 5 rupees per minute. The factory cost is 5 rupees per minute. The manager wants to rank the blends based on the throughput accounting ratio. So this throughput accounting ratio definitely is a concept for you in costing. So you probably have to be very, very much ready with it as a concept. Okay, now I need to figure out as an accountant, this throughput accounting ratio is a concept that is very, very important for me to figure out. How do I allocate my limited resources to maximize the profit? That's the whole concept here. Let us talk concept. Once you talk concept, then your solutions become easy for you. This will be used to plan the production schedule for months when blending time is a bottleneck constraint. Okay. So ranking basis, so you'll have to do some computations. I probably will definitely take you through that. That will be very useful. So uh, I think what I'm going to do is I'll definitely share the screen. Give me a minute time with the answers for you so that you are able to appreciate how this entire answer is done, and it becomes easy for us to have a meaningful discussion. I'm going to stop sharing this and then I'll get into the solution. Let me just try and do that. It actually took a little more time than what I anticipated. My apologies for that, but yeah, I think I'm fairly ready with the solution for you. Yeah. So throughput accounting ratio is a concept by which I'm trying to measure the um, financial efficiency and the profitability of a product relative to a bottleneck resource. With this bottleneck constraint, how I can improve my profitability? A very simple concept. So throughput return per unit is selling price minus direct material cost. You get the return, and the cost per factory hour, which is put here, is here you get it. The time required for the building machine 20 minutes, 30 minutes, and 40 minutes. Contribution per minute you have 10, 6.6, and 7.5. Factory cost is 555, which obviously means that throughput accounting ratio is nothing but your contribution divided by the factory cost per minute. So you'll find that contribution in blend one is 2 rupees. You'll find that blend 2 is 1.33 and the blend 3 is 1.5. So, but the ranking, so obviously as per rankings, 1, 3, and 2. So blend 1, blend 3 is 2, and blend 3. The important fact for you, which I think we need to really highlight, is that your throughput accounting ratio should be more than, should always be equal to 1, if not more than 1. It should be more than 1. Obviously, if it's 1, means you are breaking even. It's a waste of time. Given the heightened competition, we cannot afford to, put it. And if it is less than 1, then obviously you have a constraint. You might want to think whether you want to put an additional machine. These are the reasonings that we can give. The second thing is that more than 1 means you are profitable. So you obviously would like to create and concentrate and produce a blend which is actually producing more profit for you. So obviously blend 1 is producing more profit for you. So your focus should be on blend 1. Your focus should be on blend 3, which is the next profitable one, and then blend 3. What you do from an audit angle, from a company's angle, business finance angle, is whether all the numbers which are going in, particularly for your factory cost, is correct, direct labor, direct, depreciation, everything, all those things have been captured. You have to see. So that is something that I leave that to you. So that's something that I wanted to explain this whole concept to you. And then now I will stop sharing this screen and probably go back to the earlier one. This is just to give an idea what the answer is and to discuss with you the answer so that you are engaged in how do you logically prepare a solution. I, as an examiner, would expect a little more theory in it. So the calculation, they have just given abstract, but I would encourage you to write little more than what it is so that you write the reasoning, and then definitely the answer will be far better than much more healthier. Yeah. So moving on to the I hope it is visible for you. Question number 5. RTL has divisions like plantation, processing, blending, and packaging. The popularity of tea has increased the demand for tea leaves in the market. Many tea companies do not own plantations of their own, which is what we saw in the case study. And they purchase the tea leaf directly from the tea auctions. RTL uses only the tea leaf produced in its own plantation. Plantations are producing at full capacity. Brokers from external market are offering the tea plantation at a price of 200 per kg, while the marginal cost of production is determined 170 per kg. So selling price 200, marginal cost 170. So anything more is profit for you. The net marginal price at the processing division is 210 per kg. Plantation division, processing division is 210 per kg, while the price at the processing center by which they can purchase the tea leaves, procurement from other is 205 per kg. Selling price for the processing division is actually the transfer price. It charges the blending division for each kg of processing tea. So it's all integrated. The managers of each unit have their performance assessed based on surplus each division generates. So what is the best transfer pricing? Which of the following transfer pricing range will bring the goal? Will bring goal congruence between the plantation division and processing. You heard this word goal congruence. What is goal congruence? Goal congruence is nothing but alignment of all the divisions to one singular goal. Here, profitability maximization is the single agenda for us. So that's what it is. So here, the plantation division, if I sell, I can get 200 rupees. People are willing to pay. So that is my minimum. That is the tea leaves. Okay. The maximum what I can do is 205 rupees. So I'll answer what is being told is item number D, which is the correct answer. So that's what transfer pricing is 200 rupees is what is the correct solution for it. So we move on to question number. So this is how you determine a transfer pricing concept. Item number 6. Let us go into item number 6. Question number 6. It says in August 23, RTL's tea estates in a particular was received 10 lakhs as compensation from the, I think it's 10 lakhs as a compensation from the insurance company. So, okay. I'm sorry. It's not coming shared, is it? 1 second. Is it okay now? Are you able to see the screen? Can you confirm?
Sir. Now visible, sir.
Okay. My apologies. So, question number 6, I'm discussing. 10 lakhs is the compensation from the insurance company for severe damage to green leaves caused by hailstorm. We saw when we were doing the case study that agriculture income is a key concept here. We saw that up to plantation is a particular thing. Then we move on to the particular process where the standard will not be applicable because it's not biological asset. These are all absolute concepts. I don't think we need to even worry too much about the answers and all. We have to really figure out how conceptually I'm able to correlate. That's very important. A trainee accountant at the head office believes the entire receipt under insurance policy would be accessible as income from other sources. Evaluate this view. The accountant's view is correct. The entire company is accessible as income from other sources. Accountants incorrect. No part of compensation comes as a manufacturing income. It cannot be appropriated under Rule 8 between manufacturing and having income will be agriculture income. Very good. Accountant's view is incorrect. Only a portion of compensation accessible as business income. The accountant's view is incorrect. The entire income would be treated business. I think it's very, very simple. I am getting compensation for severe damage to an agriculture activity, green leaves, caused by a natural act. It has nothing to do with production, etc., etc. I have a crop loss. Simple concept, crop loss. I have a crop loss. Without crop, can I get into blending? Can I get into processing? Nothing is possible. Is it a processing loss? No. Is it a production loss? No. How I am eliminating all these facts before I arrive at the conclusion that it is related to the initial production of tea leaves by nature in the plantation got destroyed because of an act of nature, force majeure clause. And hence, it is nothing but a compensation for an agricultural failure caused by a natural disaster. Hence, I am perfectly fine logically to claim this as an agricultural income. Very simple. I'm not even bothered about standard. I'm simply going with logic. This is how you have to dissect your answers. Otherwise, what will happen? If you are rule-based, you will get your answers wrong. If you are principle-based, you will get your answers right. I encourage all of you to think, what are the rules? What are they? What is the logic? Don't go by rules. What is the logic? What is the principle? And then you will find, like how you eliminate it. Is it processing? No. Is it for packaging? No. Is it production? No. Then you find this is agriculture income for me. So that's the correct answer. So I'm moving on to question number 7, which is, the induction program for new hires is underway. They are being introduced to the history of tea in India as well as how RTL grew to be a leading player in this market. One of the inductees asks, What is the rationale behind RTL's decision in the mid-80s to expand its operations in a saturated market? It could have maintained the status quo as a plantation company producing tea leaves. Why did it get into blending packaging marketing business? How did RTL manage to become a market leader despite the competition? Very, very simple. So we need to give a. So you are required as a deputy finance manager at RTL to provide an explanation behind the rationale behind this business decision. Also based on the case study, information in case study, assess the company's success in a competitive market. I think I would think here the answer, one of the greatest things, the answer is you have to really think through the Porter's five forces model and probably give a very detailed explanation. What are the things you did right? You went into vertical integration because you wanted to have a higher profit and you had a control on your supply chain. Then you need to discuss the fact that the earlier 80 days was the compete to bring the final product. I can do it in 20 days because of my control on the raw material. Then I have done extensive study of the markets in 4 different states. I had a consumer preference, etc. So you can say this is what I did. I did all the things right: competition study, entry barrier, supplier power, buyer power. Then threat. Then competitive industry. There is not much of competition. There were many players, but they were all buying leaves and then processing it. We don't know the quality. So I have a supply. I have a huge upside on the quality. I think it's a very nice answer. You can write as imaginative as possible to get your answer right, and you have enough material within that 3 pages to get your answer right. This I think would be the right way of putting it using the Porter's five forces model, and I think that will give a very good insight. The next question that I'm talking, because I want to complete this case law and I want to complete the other case law, SG, one more FMCG on fashion, so that 9:15 we have some at least 10 minutes for questions. At RTL's Darjeeling plantation site, manufacturing process. So these are all very generic questions. You should hit. Seventh is an open field for you, right? Crunch your answers. Again, there's no right answer here, so I don't want to discuss the answers too much, but I'm guiding you to write the right answers. Right from the market, fragmented market to consolidation, to how you have built your brands, to how you are supplying both the dust and the tea leaves, how you have been able to do an overseas acquisition. It's all fantastic. Actually, you can give a beautiful story to the new inductee, and then how you got listed, how your brand has become popular. Your answer on question number 7 is fantastic. Actually, you write all these things and then say, based on information, assess the company's success in a competitive market. You're actually going to get full marks. Anybody who reads it will probably be very happy to. Only thing, please ensure that you draw a reference only from the case study given to you. That you please be very careful, because the examiners who are having the answer sheet with them will also be looking at the same case study. Don't try anything which is extraneous or not available in the case study. Item number 7. So at RTL's Darjeeling plantation site, manufacturing process commences with plucking of tea leaves on the plantation. Once the tea leaves are harvested, they are transported to internal processing centers to continue the manufacturing process. The local accountant at the site is currently preparing site's financials in accordance with the Indian accounting standard for supervision. So raise the following questions: whether these plucked tea leaves are agriculture produce under Ind AS 41. How should plucked teas be initially measured? What will be the subsequent measurement of such leaves in line with the Ind AS or and Ind AS 2? Very, very simple. I think I would, manufacturing process commences with plucking of tea leaves. I think they're transported. The local accountant is preparing. So very simple. To answer this, agriculture produce, tea leaves are nothing but agriculture produce, will come under Ind AS 41. The moment it goes into processing, it loses the character of agriculture. I'm going absolute logic here. No rules. Principle. The moment I get into a manufacturing process, then I am using a machine or I'm using manpower, I'm using anything which is extraneous and added. Immediately, valuation principles under Ind AS kick in, under Ind AS 2 kick in. That's the answer for you. So they should be measured at initial cost and subsequent measurement should be in accordance with Ind AS 2. So it's all simple answer. There's no competition, nothing. This is if you put this answer, you are actually right. So that's what the answer sheet also says. So the last question is enumeration. Okay, the last question, I think ninth question. In the process of preparing the financial statements of for the financial year ending 31/3/23, the management of RTL has made several accounting estimates and affirmed to the auditor that all necessary accounting estimates have been recognized, measured, and disclosed in the financial statements in accordance with the applicable financial reporting framework. However, in the course of audit, auditor has observed some change circumstances giving rise to the need for an accounting estimate. Enumerate some circumstances, changes which will prompt the inquiries from the management of the inquiries. Well, I think here I would encourage you to discuss the right answer. Estimates, extraordinary subject in auditing. Here I'm pausing for a moment. You are the enumerate change which you prompt inquiries from management. The auditor has given, has found out that you need to make an accounting estimate. Accounting estimate, at the end of the day, is an estimate which has a scientific process to it. People think estimate has no scientific process. It has a process. You, as a management, should figure out the process in depth and then say, what is the process I have? And then what are the data points? What are the assumptions? What are the key assumptions? What is the evidence for those assumptions? And then how do I make an estimate? So this is how an estimate is made. Accounting standard SA 540 completely deals with it. Auditing standard SA 540 standards on audit, statements on auditing deal with it. Key accounting estimates. And they, give the room for the auditor to analyze it. An auditor can also do an independent verification of the estimate by bringing his own specialists also, whenever he finds that estimates are to be challenged, the veracity to be challenged, the assumptions to be challenged. I think this is the pith and substance of this answer here. So you have to be immediately, auditing is one subject. So immediately your answer, you should go back to essay, where you will find the textbook now. I'm visualizing exam scenario. You will go to the audit textbook and then you will scan it and then get your answer right and say these are circumstances, which gives you SA 540 gives you those circumstances. Very simple. So this is how you conclude this, case study. Very interesting case study on T. So we touched upon Ind AS 41, we touched upon Ind AS 2, we touched upon transfer pricing, we touched upon throughput accounting ratio, we touched upon auditing of estimates. We touched upon how you make an estimate as a company official. Then we touched upon how you summarize the growth of the company very logically, by doing a vertical integration. How you acquired a foreign company using a horizontal integration. How you are able to take a business decision, visualizing how your future will look like, and then how you integrated and business combination accounting, consolidation, then agriculture accounting, then insurance accounting. So various concepts we saw in this case study. And with this case study, what I will do is I will stop the share and then I will pause for a moment and then I will take a minute to move to the next last case study for the day, which is also on FMCG industry, on textiles. Very interesting. Today, our focus, I thought I should, dedicate my time to FMCG, which is a sunrise industry, which is very vast in subject, which is very vast in application. It employs millions of people from the lower strata of society, and as increased aspirations of Indians who go to malls today. You find malls even in tier 2 cities today. And surprisingly, just to give you additional information, which is not available anywhere. Actually, malls are more popular in the developing countries than developing countries. Developed countries, malls are no longer popular. They are more haunted houses. That's what people who come back from US tell, because most of them are, go to the large format shops like Target or Costco. So with this, I will pause and I will take a 1 minute changeover time to the next case study. Just bear with me for a minute. Yeah. I hope the screen is visible. Is the screen visible? Very good. Thank you. So I'm just trying to, so this is the last case study for the day, and we will try to, do it, do full justice to the case study. So the idea is that we have covered a lot of regulations. We have touched upon things. So now you have a clear idea conceptually how you would attack your question paper. So SEBI, so I mean, it's amazing. It's actually so. Actually, this is a paper where, in my view, uh, you guys should target nothing less than 70, 75 marks. Easily you can get it. Because this will also help you from a student perspective to balance your total and ensure that you clear the group. So that should be the target. So let us move to this case study two. SG's adherence to strategic vision in pivotal. I'll read this fast so that we have plenty of time to discuss the answers as we move along. SG's adherence to strategic vision is pivotal in
Sir,
maintaining its
PDF
competitive edge
is
in the
not
fast fashion
visible.
industry.
Only the screen of that option is there. It's not visible.
Screen is not visible.
Yes, sir. The case study is not visible.
Okay. Okay. Is it visible now? Is it visible now? I put it on share mode. Is it visible now? Is it visible?
No, sir. No, sir.
No, well, 1 second. I have done the correct thing. Just I will just give me a minute. Yes.
Perfect, sir. Now it is visible.
So it's so now it's visible, right? It's good. Okay. So this is the last case study. SG's adherence to its strategic vision is pivotal in maintaining its competitive edge in the fast fashion industry. So you have to understand what is fast fashion industry than the classic industry. Fast fashion industry is where you keep changing the wardrobe every 3 to 6 months. You find fast fashion industry in the country booming today. Gen Z, you are the people, biggest consumers. You change the wardrobe every 3, 4 months, every 6 months. You'll find less than 500 rupees, 400 rupees, 900 rupees, like that. You find at price points which are charming price points. Charming price points is something which is attractive, and you will find most of them are young shoppers, teenagers who go to shop. So fast fashion, that is fast fashion. Concerns about the quality of products from fast fashion companies are common, as these companies often aim to sell more by cutting costs. However, these robust quality control systems ensure delivery high quality products, distinguishing many of its competitors. So I answered. I answered your question. I answered your doubt in the first line itself. The company answers. The SG's key strategy to sustain its competitive edge is minimizing the time span between the design creation and the store availability. So this is the beauty of the fast fashion industry. From the conceptualization of design to availability in the store. What is my lead time? Is it 1 year? Gone. I'm gone. Is it 6 months? Gone. The turnaround should be very fast. Few weeks, maximum is few days. And you have to see what is trending in the market. Today, with social media, we say what is trending, right? So one of the key strategies is accelerating the companies continue reducing the time for product design to distribution. The integration of online platforms is becoming industry standard. SD is keeping pace with the development to stay competitive. Marketing and communication play a key role. SG has got a social media presence. It has built relationship with customers, does super efficient analysis of what's selling, what is not selling, being said on social media. Uh, Today, YouTube and become a platform for sales, particularly tech sales. I find it very innovative. Uh, they operate globally with substantial presence. Belgium, significant influence in the fast fashion market. Europe is always known as fast fashion market. There are compete brands which are there. Then pricing is critical for SG, which targets a wide market offering products for women, men, and children. So it is serving all the market segment, women, men, and children. And the pricing strategy is aimed to attract both middle class, largest market share, and wealthier individuals. So that's very important. Again, we know what it is: brand cannibalization, brand premium brand, local premium brand, not so premium brand. All concepts we all understood. In the South Asian market, which is probably markets like us, SG's products are relatively affordable, catering primarily middle class. India is a classic example. In areas, conversely, in regions like Europe, products are more expensive, targeting consumers with high social status. In South Asian market, SG employs a below market or penetrating price strategy. What is penetrating price strategy? Is most of the chartered accountant on the lighter note, all CS employ this penetrating pricing strategy. I have to capture the client. So one of the reasons why we are unable to probably make big time income, although offering quality service and offering quality advice, is because most of us follow penetrative pricing strategy. Institute is doing its best to avoid that, but I must admit that it is also coming in services industry. And my recommendation is that it's counterproductive to us. It is good for companies, not for services sector. So that's my view. But anyway, nevertheless, that's also pricing strategy, I must admit. It's called the charming price tactic, selling below the competition to attract a larger customer base, particularly among the middle class. It captures significant customers. The consumers who are less sensitive to pricing are willing to pay premium on trendy products. So you find again a classic example. You go to I'll give an example of Louis Philippe and Peter England. Peter England shirts, you will never find it more than 1,000 rupees. Whereas you go to Louis Philippe, you got ranging from 3,000 rupees to 6,000 rupees, depending on the quality of cotton. Giza cotton from Egypt, 6,500 rupees. There will be some chemical which they put to make the shirt look shiny. And that shining look will be there for a couple of years. It will be like a new shirt whenever you wear it, provided you take care in washing. So I'm just giving examples how premium customers are dealt, how the average middle class is also dealt. The pricing strategy is part of a broader 4P marketing mix, product, price, promotion in place. With a diverse product range, it attracts a broad customer base. It uses zero advertising and endorsement policy. It is spending 0.8% of sales on advertising compared to average 5% spent on by the competition. In fact, the key KPI indicator for FMCG is ad spend. For pharma company, the key KPI, the key performance indicator is R&D spend to sales. For FMCG company, the key performance indicator is my spend on advertisement to sales. Keep increasing the advertisement. I had a very interesting case this year. Fantastic observation I had from my audit team. I was auditing an FMCG, and we were analyzing the sales and the advertising expenses in every region. And whilst start audit side, you just get the vouchers, you complete that process. I wanted to do analytical review because one of the standards in auditing talks of final analytical review, and I wanted to understand why the ad expense is lower for the year compared to although sales are higher. And I had a very nice explanation with management, and I corroborated. They said, sir, our ad spend was last year very high. You see, in these areas, the current year sales has increased because my ad spend I already done last year. A simple fact, I corroborated the expenditure. I corroborated that the last year expenses. And I also saw the sales volume this year in these areas. Whatever spend they made last year, they actually increased the sales this year. So such patterns you can see when you are doing audit. You must be fast to capture those trends. So I think this is advertisement. Compared to 5% that they are spending. The promoter is the richest man. It operates 1,113 retail stores across 93 countries. So it's a pure play MNC. So your mind should be now on consolidation. How do I consolidate 93 companies? What is my role? So what is the, how I consolidate? How do I do elimination? How do I intercompany elimination? How do I do interco reconciliation? Every company should be, every office should be reconciled. How do I do transfer pricing? So a lot of questions will be there. Please put a side note for all these things. SG uses stores, location, store displays as key marketing strategy. A lot of time and effort designs the window displays and grabbing. And then pricing strategy, I have told you, is broadly to give an advantage over rivals like R&M and Drop Top, enabling global expansion with product demand. SG, part of the Goyle Group, has gained global recognition through its innovative retail strategy. Unlike many competitors, SG minimizes time between design conception and store availability just 2 weeks. This is what I told you. It can't be 1 year, it should be 2 weeks. Business model is meticulously designed to maintain competitive edge. So I think I'll skip this para. They'll move on to anything more relevant. They've got a pre-installed app in one of the mobile phones, and then they've got questions on. Now you see particulars of the SG Indian subsidiary. They have a count of 1,000 employees in 23-24. They have employees are given 35 days PL. So obviously, immediately your mind should strike now. India's employee benefits. Urgently, you must, okay, what is my standard? But let us figure out what are the things. So employees 35 days PL, SL, casual leave is given. Out of the total PL sick leaves, 10-day PL and 5-day can be carried forward to next year, which means that need not be encashed. Based on past trends, noted the 200 employees will take 5 days of PL and 2 days of SL. And 800 employees will avail 10 days of PL and 5 days SL. Indian subsidiary has been incurring profits since 2018. So that means you have got profits. 23-24, the distribution profits to employees at 4% during the year, but due to employee turnover, expected payout is around 3.5%, which is the profit earned during the year is 2,000 crores. It has employment benefit plan available, which is also in the nature of a defined contribution plan. There are two types of, you are aware, there are two types of contributions: defined contribution, defined benefit plan. I don't want to go in depth into accounting aspect, defined contribution, defined benefit, but suffice to say, defined contribution means it is the amount is fixed and determined. Benefit is defined benefit plan is something where you say after so many years I'll be paying this amount. Gratuity is a defined benefit plan. PF is a defined contribution plan, to give examples. Where contribution to the fund amounts 100 crores will fall within 12 months, and 20 crores is already paid to 23-24. Okay, so please keep this in the back of the mind. These are numbers. Then there is a CSR activity. The Management Committee of India has issued rights share to all shareholders, which include employees of the company. Very good, excellent. SG India issues its own shares to charity without any consideration to NGO, which is working for promoting gender equality, empowering women, setting up homes, etc. So there is a share-based arrangement, share-based payment. Different concepts, both of them are. I will probably just get some hints there. And then the last one, they say asset acquisition. So you are writing a side note here. Okay, I got employee benefits. I got share-based payments concepts here. Then I got.
मैं कैसे ले सकता हूँ? आपने हमारी मदद के बदले इतना सब करने की जरूरत नहीं है।
Yeah, excuse me. Yeah, asset acquisition. SG India acquired machines for production in Gwalior. List price of machines, import duty, delivery fees, electrical installation costs, pre-production testing, purchase of 5-year maintenance kind of vendor. Okay. In addition to the above information, it was granted a trade discount of 10% in the initial list price to the asset, a settlement discount of 5%. If the payment of machine was received within 1 month. Okay. The company paid for the plant in 20th April 2023. That is 1st April it acquired, 20th April it paid, which means I may be eligible for settlement discount because I paid it within 1 month. That is a fact straight away available. The machines are operating below capacity for 4 months. During this period, production cost of 2 lakhs per month was being incurred, which means 4 months into 2, 8 lakhs was being incurred. The proceeds from sales was 1,50,000 per month. Similarly, the proceeds of sales from pre-production testing was 1 lakh. So we have pre-production testing costs of 5 lakhs. You got sales of 1 lakh, which means 5 lakhs minus 1 lakh, 4 lakhs is a pre-production testing cost, because you can adjust the revenue from the pre-production testing against the revenue which is earned during that period. So I'm giving answers which are available readily in front of us. Then the last one they're talking is uh, SG holds a commercial plot in Bombay, which it didn't sell. It has a plot in Bombay in India. Best broker headquarters in USA has been appointed by SG India to find suitable buyers. SG India is a global company. We saw it has got 93 country operation. So obviously it is appointed a broker from overseas who is in USA, and to find some suitable buyers for this said commercial plot, which is situated probably, I think, some typo error. It's Bombay in the same location. Best broker identifies legacy estate based out of USA as a potential buyer. It is to be noted that legacy estate Inc. is controlled from India, and hence is a person resident in India. A deal is finalized, and Legacy Institute agrees to purchase a commercial plot for USD $700,000. According to the agreement, SG India is required to pay commission to best broker in USA for arranging the sale of commercial plot, and the commission is to be remitted to USA because the headquarters of best broker is located in US. Simple. So there's a FEMA aspect to it. So there's a FEMA transaction, and I probably need to figure out what I'm going to do. So in FEMA, we probably immediately have to think, correct, it is not a capital account transaction. I'm just giving straight away the answers which are striking me, which should strike you also. It is not a capital account transaction. It is not an investment. It is a current account transaction. It is a payment. It is an expense for me. So I will park my answer there. Now, with this background, having understood this case law, and your mind mapping, I'm teaching a technique to you now. You're just mapping out the facts: fashion, fast fashion, competition, 93 country operations, richest person in the world, excellent brand name, segmentation of brands, South Asian market, Europe premium brands, selling price. Then I got, I got some payments made to employees on leave and encashment, etc. Then I have probably a question on, I'm giving some shares to the, NGO. I think it also talks of, which include, the company, the management committee of SG has issued right share to all shareholders, which include the employees of the company, which means there is a right share is issued. Further, SG own shares to a charity without any consideration. So there is a share-based, that particular share is available. Then, of course, the computation of the listing price. So these are potential things that I need to look at. Which of the following best describes how SG's vertical integration contributes to competitive advantage in the fast fashion industry? Okay, so the backward integration, acquiring raw material supplies leading to cost savings through economies of scale. Forward integration, backward integration, maintain in-house production and control over entire supply chain, allowing it to maintain rapid adjustment. So the answer is backward integration, by acquiring, by maintaining in-house production, control over the entire supply chain, rapid adjustments to meet market demand. So that's the right answer. Answer C is the right answer, because right from production, not only raw material, design is also there. And you also read that one statement which said that within 2 weeks, you were able to position a product in the shelves. So that's question number 1, which is the right answer. Question number 2. Which of the following does not describe how SG has maintained their competitive advantage with focus strategy? It is not, okay, which it does not. So be cautious when you read the question. Not they've actually given. So SG has grown rapidly, expanding to 1,100, making it successful branch. SG success evident in the profitability of founder, who is the 9th richest person. SG follows a push model of the inventory and supply chain to maintain its market position. SG spends only 0.8%. So here, what I have not done? I have not done. What is it I have not done? I have not done the item number D. I have not done. I have not followed a push model of inventory, meaning I have not dumped inventory in the stores. I follow according to the demand. What is that? Because I have control over my supply chain. I can do right from design, conception to this thing. I'm very fast. So the rest of it are all facts. I got 1130 in the facts. So that is, then I got 0.8%. That is also a fact. I'm not spending too much money on advertisement. So obviously, I'm not doing that. That is not, I'm not spending too much money to maintain my competitive advantage. But what I'm not doing a push model. There are two types of inventory. One is a push model, the other is a pull model. Pull model is done with the market by its market forces. They are asking, they are bringing demand to a product. It's a pull model. Push is where you are pushing down the throat on the market. So it is not a great strategy to do a push model inventory because you are going to be saddled with returns at a later date. So I don't want to get too much in depth into it where you are having a push model inventory, but I would rather say that your push model inventory uh, should be for according to the demand. Push model is generally not against the demand. You just dump it to suppliers and tell them you some other sell it. You will never have a profitability because of that. So that the company is not doing, which is why they are maintaining their competitive advantage with their focus strategy. So that's a correct answer. Item number 3, very simple. I think can the managing director of a region who is also an employee be provided salary and Ind AS? I think very simple. He is also an employee. Just because his designation is MD doesn't give any uh, doesn't make any difference. So I think there's a straight answer here. He's very much an employee under contractual employment. He has a role and responsibility in his fiduciary capacity to uh, contribute as managing director, nothing more than that. So very much is an employee. So he will also be under Ind AS 19. Excellent. The legal requirements of this brokerage requirements for Remedy Commission out of India, a very nice one. I urge you to go through this liberalization rules, Master Circular 2016. It's a liberalized schemes, LERM scheme, Leveraged Exchange Remittance Scheme. It's called LERMS 2016. Where government, because of its fairly comfortable forex position, since the government can actually go ahead and do, so in current account transaction, you got payment of commission as a separate heading. In that heading, it says 5% of the transaction value you can put. So here the commission they're paying is, $49,000, which is much more than the 5%. The sale transactions were $700,000. 5% of is 35%. Up to 5% you can send on your own without government approval. Beyond 5%, you need to take the government approval. That has to go through the authorized dealer. So here it is more than that, means it is 49,000 you are going to pay, which is more than 5%. So it's mandatory for you to obtain RBI approval for remittance of the entire commission to best broker. That is a correct answer here. So you need to have a documentary evidence for that. You need to have an agreement. You'll have to demonstrate to the banker that the money has already come in, 700,000 has already come in. The sale deed has to be deposited to the AD. You need to get a chartered accountant to issue the certificate. And if you are a practicing CA issuing the certificate, then you need to follow the guidance note on issuance of certificates. So you see one single transaction, how much of triggers it is having. And then you got to look into TDS aspect. When I am making the remittance outside the country, I also need to check the TDS aspect. And I also must ensure that best broker is not a related party to ensure that there is no related party transaction under direct access. So much of implications you have to think through before you come to conclusion and finalize this transaction. You have to, as a financial advisor, prepare a detailed checklist of all these things and ensure that you are giving this to the management so that company is fully protected. Okay. So this is how you address this. So answer D is the right answer. It is mandatory to obtain prior approval of Reserve Bank of India for remittance of the entire commission of 49,000 by SG India to best broker. That's the correct answer. So here the next statement is also true or false. Which statement is true regarding the application of Ind AS 102, share-based payment to ESOPs and issuance of shares to charity? ESOPs are covered under 102 only if employee receives shares as part of their employment benefits, regardless they are shareholders. Ind AS 102 does not apply to the issuance of shares to a charity without consideration, as it is not a share-based payment transaction. The issuance of shares to charity without consideration is covered under Ind AS 102, a share-based payments arrangement, while ESOPs are not covered if employees are receive shares in the capacity of shareholders. Here, ESOPs are covered under Ind AS 102, regardless whether employees receive their shares in their capacity as shareholders, and the issuance of shareholders charity without consideration is not covered under 102. The right answer is, Ind AS would be applicable. Is a share-based arrangement, while ESOPs are not covered if employees receive share in their capacity as shareholders, which is item C is the right answer. So I wanted to probably share a small PPT, if you will allow me a minute's time. I think it will be interesting. I just prepared something to explain this, whole concept. I'll just try and see whether I will. Yeah. Yeah. So I'm just going to share this screen with you. Is it visible now? I hope this is visible. So
Yes, sir.
yeah, I wanted to give, see, these are very important concepts, how you write in the exam. I wanted you to present this so that you can take a share-based arrangement or a share-based payment. It's in a share-based arrangement, the scheme, the contract itself is the nature. The share-based payments accounting transaction or event. Focus is terms, conditions, vesting parties involved. Recognition, measurement, and expense and liability in share-based payment. An ESOP scheme granting 1,000 to an employee vesting of 3 years a share-based arrangement. The journal recognizing the fair value as expense of the vesting period. So what was agreed, what gets accounted? That's a concept. What was agreed in a share-based arrangement to what is being paid. And when people talk of share-based payment, they mean accounting treatment and the arrangement. So here, so that's this is the sort of answer that you would love to give. And then I've given answer as C. I think the idea for you is how do you look at the perspectives? How do you look at different perspectives? How do you analyze? That I'm training you for that. So I'm not going to spend my time on what is the right answer and wrong answer here, but broadly to give you. So now you understood what is a share-based arrangement or share-based payment, and it is a contract whereby the party will receive the equity instrument of the entity or cash, can also receive cash, whereas in case of share-based payment, it's accounting for the transaction, cash settled or equity settled based on whatever it is arranged and what is agreed. So I think that's how it works. So I thought I should just share this small PPT with you, and then let us move on to the next, probably the next question here. One second, let me share this. Yeah. I hope this is visible. I'm coming back to my questions now.
Yes, visible
Very
now.
good. Analyze and evaluate. Analyze and evaluate. How SG's approach product differentiation contributes to its competitive advantage in the fashion industry. I think it's a very nice theory question. I would allow you to look at the product strategy. There are enough materials for you. It has got 93 country operation, 1,100 plus stores. It has got fashion designs. It is having segmentation of market. You can write everything neatly, and then say this is how they are able to maintain their competitive advantage in the fast fashion industry. And you write points like 20 days, 2 weeks from conception to coming to the shop floor or to the retail space. All those are wonderful concepts for you to write. And I urge you to look at, because I'm taking this on institute material, you can happily, look at this institute material, see what it is telling you. But to broadly give you the guidance and giving you the top-notch points, so that when you read, the answer also becomes very relevant for you. So it talks of the things like It talks of bargaining. It talks of concept inside. It talks of five forces. It talks of again, I would definitely look at this is case study. So the rapid design to store turnaround, vertical integration by keeping substantial portion of manufacturing in-house and located in South Asia, it can adjust production. Then selling clothes exclusive to its own stores, located in strategically located good places, high volume customers. It is maintaining this thing. It has got segmentation. It is addressing high value customers. It is also addressing middle class customers. Then highly evolved data structure. Social media platform. I can make analysis. I am very much attuned to social media. I look analytics very simple. So data is a key. Data is king for me. I know what I'm selling. I know what sells. I don't know. I know what I look at customer reaction in Instagram reels and then take decisions accordingly. This is not common in the designer industry. Then dynamic pricing strategy. I told you turnaround time excellent. Then the strategy is that SG success has come. The fact that probably 0.8% only advertisement. So Goel has not spoken to the media. Maybe you want to see by making brand experience meaningful. Therefore, SG has been immensely successful maintaining competitive advantage through differentiation strategy. Maybe you want to probably sponsor some events. You want to sponsor some more shows. Slightly, you have a liberty to probably increase your advertisement expenses, or you can control it and do some. Since you are very active in social media, you can promote. You can use that in a more effective manner, which you are already doing. So I think these are the reasons why they are successful. Maybe you can add some suggestions and close your answer to give you a flavor to the whole thing. So I think this is how probably I would, look at it. And the last one would be, working what will the treatment of short term. There are three things India is, employee benefits standard deals, short term compensated. One is compensating absences, the other is short term benefits, the other is profit sharing plan. All the things are all to be accounted. They are all debits to P&L. So they are all mere accounting only. The contribution from exceeds the contribution to that also gets debited to the P&L. What would be the accounting if the payment from the defendant does not fall within due 12 months? That probably has to be dealt appropriately. I would leave the answer to you. I'm not getting into accounting aspect. I'm more keen on putting concepts for you and getting that highlighted for paucity of time. And the last one, the CFO of the company wants to know at what value would this asset be recognized in the books of accounts. You got a statement. Please deduct all the discounts. To go back to the answer, I can probably do the mental math. Probably, you will have to do the add back the expenses to set up the machinery, to bring it to working condition, and then deduct all the list price of machines. You can deduct the discount, immediate discount, trade discount from the list price. 8 lakhs to be deducted, so 72 lakhs you start with. On 72 lakhs, you have the import duty, please add it. Delivery fees, please add it. Installation cost, please add it. Then deduct the production, this thing. Purchase of 5 units on window in my vendor is an advance payment. I don't think that will be part of the machine cost. Obviously, it's not a capitalization item. Very simple concept. As far as the settlement discount of 5% is concerned, it is to be received. It is being separately received. So obviously, it's income, other income for me. It cannot be adjusted against the purchase price. Very simple concepts, all of them. Then you look at the standard and you close it off. So this is how exactly you prepare your answer and close it. Even if you make one small error, I don't think your mark will be cut, but you approach the problem correctly. Your computation should be list price of machine so much less discount. Very neatly you write it, you will have your answers and then you get your solutions. Okay. So exactly 9:15 we are. I'm going to stop sharing the screen. Happy to take questions from you for the last 2.5 hours of intense exercise that we did. Very happy to share to take on any questions you have, and I'll be very happy to answer.
Yes, sir, am I audible? Can you please
Yes,
confirm?
yes, you are very much audible. You can answer questions. I'll try my
Okay,
best to, please ask your question. I'll try my best to answer them. Yeah.
sure, sir. I just have few queries. The first one is, what do we understand by the defined contribution plan? That was not clear to me.
The defined contribution plan is amount is fixed. Your PF is a fixed amount. That's a defined contribution plan. That's all.
Okay, like you are contributing to some fund.
Yes, yes, absolutely.
Okay,
Defined
and
benefit is okay. You stay for 5 years, gratuity, all those things. Defined benefit. Benefit is defined. That's all. Simple concept.
okay, got it, got it. That means the contribution to PF account and all.
Yes, 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 yes. That's all.
Okay. So what is bottleneck resource time that you were accounting for?
See, bottleneck constraint. No, it's a concept. You have to understand what is the constraint for me not to achieve my full potential. Very simple. In the example that we chose, the the processing plant, I have a bottleneck because I don't have machines. The machines are not in cannot run in full capacity because of the rainy season. So I have a limited time only. Within that, I have to see what is the best I can process and I can get my out. That's a theory of constraint. TOC, it's called theory of constraint. That is a bottleneck constraint. I have to work with the bottleneck constraint. If it is below one, then I think the constraint is very heavy. I am losing money. I'll have to remove the constraint. I'll have to put one more machine. That's the whole idea. That is not stated in the solution. That is what solution I am giving.
And the another one, you were talking about Master Circular 2016 about loans. What was that? I didn't get it.
2016 FEMA, you please go and look at it. I want you to direct your attention to current account transaction, very liberalized scheme 2016. FEMA came in 2010. After that, 2016 liberalized new circular has come. Please find research.
You're talking about LRS, Liberalized Remittance Scheme?
Exactly, LRS. LRS, and
Okay,
in
okay.
that you will find the payment of commission also liberalized in a massive manner, and you will find
Okay.
commission to for real estate transaction done in India, separate subject itself is there. Please look at it.
Yes, yes, till 2,50,000 for the Indian
Absolutely,
resident
madam.
is
Please pay
good.
all this. Yes, yes,
Okay,
exactly.
okay, okay. I was like, about what loans you're talking about?
Yeah, yeah, that's exactly it. That's it.
Okay. That was the only query which I had. Thank you, sir.
Very good, ma'am. Anybody else has got any other query? And so I will tell you, this subject is minimum 75 marks for you guys. That I can share. That's my view. I'm handling this session now for the second time, and probably next time when I do, I want to take a little heavier case law with more this thing from the first book. That is not heavier case, but today you look at it. We covered FEMA, we covered some aspect of SEBI, we covered a lot of aspect of India. We covered auditing of estimates, SA 540. We did touch upon some strategy like Focus 5 process model, the 4 P's and Menlo's matrix. I think pretty heavy in terms of all these things. So all you have to do is figure out the right textbook you have to take to the exam center, know where the headings are there, then immediately look up it as you write the answer. That will be my thing. And you must hit the right jackpot and answers. Whenever they are asking you to define the strategy of success for a company from the material itself, there you have to score a lot of points. So there your analysis is very, very important. So please read it from that perspective. Reading is very, very important. So how I memorized, and as I was reading it, I was memorizing it. So please keep that attribute so that you'll be successful. Okay.
Definitely, sir. We'll follow your instructions.
Yeah, it will be useful for you. Any other thing, Deepakji, from the institute, you want to put any closing remarks, or I think we can no, we are done with the session 10 minutes before.
Okay, sir. Session over, sir?
Mine is over from my side. I think I'm done. I think
Okay, sir.
all the queries they've answered, whatever they've had, answered. And
Okay, sir. Thank you, sir.
thank you so much, everybody who has joined the session. And I hope you have a great weekend ahead of you. Thank you. Thank you. Bye.
Thank you. Yes, Sanki ji.